So you have to think about your own risk reward preferences, and there's definitely risks involved that go beyond a developed market like the U.S. when you're thinking about non-U.S. markets in general, but particularly emerging markets, and even the same I think is the case with individual names where you have single stock risks. Yeah, this is definitely these single stock levered ETFs are definitely for the more aggressive investors.
I'm your host, Melanie Schaffer. Welcome to Lead Lag Live. The emerging markets have long been dominated by old economy sectors like banks, materials, and industry, but a silent shift is underway with cloud computing, AI adoption, and e-commerce accelerating. And some EM companies are changing the game. Now, growth is being driven by internet platforms, tech-enabled consumer services, and new economy business models. That's why today's conversation matters. My guest is Brendan Ahern, Chief Investment Officer at KraneShares, and we're going to dig into how KraneShares is giving investors targeted access to this shift, both the broad emerging markets level and down to single stock levered exposure. Brendan, welcome.
Hey, great to see you, Melanie.
So first, let's start simple. Can you explain how single stock levered ETFs like KBAB, KPDD, et cetera, work, and what kind of exposure or risk are they offering relative to a standard EM or index funds?
Yeah, single stock levered ETFs like KBAB, which basically takes Alibaba's ADR and gives you twice the performance on a daily basis. And I think that's really the key point for investors to understand is it's giving you a daily exposure. So if Alibaba's up 1% or down 1%, KBAB would be up 2% or down 2%. But that resets on a daily basis. So I think some of the issues investors run into with levered ETFs is they're not thinking about that. I'm not getting twice the performance over a month. It's twice the performance on a daily basis. So there's a path dependency. It's really the order of returns kind of determines the outcome versus thinking about, okay, I'm going to own this for 3 months and I'm going to have twice the performance. That's not the case. It's the performance on a daily basis on a levered basis. So it's a really important aspect about levered ETFs to understand is this daily compounding effect. And so that order of returns is very critical to understand.
So Brendan, when you look at the fundamentals for the companies behind those ETFs, some of them you mentioned, such as Alibaba, what do you see that the market might not yet be pricing in? And what's the bull case? Where might there be misunderstood potential?
Well, I think it goes back to one of the original points you made, Melanie, which is a lot of what's embedded in emerging markets is slow, no growth sectors. Financials and energy have historically been really, really big parts of the emerging market indices. And that explains some of the significant underperformance of emerging markets versus, say, U.S. equities, where indices like the S&P 500 are really dominated by not just say technology, but growth stocks. And they were kind of really well known for KWEB, which kind of takes the growth stocks, this kind of growth factor from broader China, broad China has not performed well. And KWEB gives you this pure growth exposure. We did the same with KEMQ, which again, really is focused on the growth stocks within broad emerging markets. And lo and behold, you have a very different outcome. And then we've thought about, well, there's actually individual companies that we think investors might want to overweight within their portfolios, companies like Pinduoduo, Alibaba, Mercado Libre, JD.com, and Baidu. And so, again, these are names that we think are arguably underrepresented within investors' exposures. And for those that are looking to have a little bit more of an aggressive strategy, we offer these single stock levered ETFs over those individual names.
Yeah, Brendan, with that being said, though, emerging markets they remain vulnerable to macro factors such as trade tensions, regulatory risk, geopolitical headwinds as well. How do trade tensions or regulatory uncertainty impact these internet-heavy, especially EM names, and how should investors think about that risk?
Yeah, I mean, certainly we recommend investors have to volatility adjust their portfolios when utilizing these vehicles, because emerging markets, just broadly speaking, just like individual stocks, is going to be more volatile than, say, developed market indices like the S&P 500, U.S. equities. So you have to think about your own risk reward preferences, and there's definitely risks involved that go beyond a developed market like the U.S. When you're thinking about non-U.S. markets in general, but particularly emerging markets, and even the same, I think, is the case with individual names where you have single stock risks. So yeah, this is definitely, these single stock levered ETFs are definitely for the more aggressive investors.
Yeah. So if we sort of switch now and talk about the broader basket perspective funds such as KWEB, as you mentioned before, and KEMQ, how do you view the opportunity there in emerging markets now, given that many traditional EM allocations have lagged tech and internet growth?
Yeah, I think we've had this incredible bull market in U.S. equities. Really, over the last 16 years, U.S. stocks have outperformed non-U.S. stocks by a very, very wide margin, about probably 800 percentage points. And so, if you think about that's 16 years is 64 quarters of owning these non-U.S. equities. And I think for many investors, they're very, very overweight U.S. stocks. They've reduced their non-U.S. Equity positions. In many cases, it's probably zero. So one, we think part of that is due to this index sector dysfunction where financials and energy was such a disproportionate percentage of emerging markets as well as China, which is why we created KWEB and KEMQ to give you this growth. But the other factor at play has obviously been a very strong U.S. dollar, and that's diminishing. That the dollar has been weakening over the last 2-3 years. So that tailwind is becoming a little bit of a headwind. So we think there's a number, besides the valuations, very high level in U.S. equities. We really do believe that there's an opportunity outside of the U.S. We just want to give investors that growth exposure, that kind of tip of the spear, in like we've done with China, with KWEB, with emerging markets, KEMQ, and now on some individual stocks.
And Brendan, you mentioned that the single stocks may be better for more aggressive traders a few minutes ago, but given the volatility that's inherent in emerging markets, and especially in these leveraged or high growth names, what kind of investors do you think these single stock or EM tech ETFs are most appropriate for? And what's a sensible way for someone to size in or manage exposure here?
Yeah, I mean, certainly these funds are going to have an extra layer of volatility, and that volatility can work in your favor, but I think you have to go into this eyes wide open, which is recognizing that there could be downside volatility, and so I think you gotta think about your own risk reward preferences, working with your financial advisor, really thinking about am I gonna do I have that risk tolerance? What's my drawdown? What am I thinking about? So I think all of these are factors, and really, ultimately risk and volatility adjusting this position. This is a small part. These single stock levered funds are a small part of a well-diversified portfolio.
Right. And finally, for investors watching who want to learn more about KraneShares single stock suite or emerging market tech exposure, where should they go? And what resources or tools does KraneShare provide to help evaluate these opportunities?
Yes, certainly we provide a wealth of information on KraneShares.com, and you can always do KraneShares.com / the ETF ticker. So KraneShares.com / say KEMQ. And we give you all the holdings. We'll give you our fact sheet, our presentation, our investment thesis, as well as, we're really in the business of providing investors all the data, all the resources in order to make an investment decision.
Brendan, thank you so much for joining me and helping me unpack this opportunity. And thanks to everyone for watching. Be sure to like, share, and subscribe for more episodes of Lead Like Live.